Welcome to this video, and in this one we're going to try and get ourselves ready to answer questions like the one we have on the screen. And the current question has a trial balance, so we're given a trial balance for 4th Limited, and at the end of the trial balance we are asked to prepare a statement of profit or loss for the year ended 31st December 2014 and a statement of financial position. Now, in the previous video we covered preparation of a trading account, and so I will run through what we did last time before I connect to what we are supposed to do in this video. So a trading account would typically look something like what we have here. So the triple X's there are representing figures, and the descriptions on the sides tell us what we need to slot in there. So when you start from your sales and go all the way to your gross profit, what you're basically preparing is a trading account for the particular year that you're working in, and this represents everything that happens with your trading activities. But the moment we decide to extend this trading account and include at the bottom here other income, first of all, so other income, and we include it here, so any other income that has got nothing to do with your trading activities, say maybe interest received, and then we subtract expenses, so less expenses, and these expenses could be anything from selling and distribution expenses, so selling and distribution, which we can include here. We can also have administrative expenses or administration expenses, and this could include salaries, rent, and those kinds of expenses. And you can have other expenses that don't fall in any of these categories. Other expenses. And as you continue, you could also have finance costs, finance expenses, finance costs, and these would include things like interest paid on your loans. When you add all those expenses and you find the total here, and then you subtract your total income here, you subtract these expenses from your total income, what you expect to find is net profit, before tax. Okay, now from your net profit before tax, you want to go ahead and subtract profit after tax. Okay, so I'll add another page there and go back to the top and say less profit, less tax. So just remove that and say less tax. When you subtract your tax from your net profit before tax, what you finally get is net profit after tax, and we can include that figure there. What you've prepared now, remember in the initial instance when we just had this from here all the way up to gross profit, what we had was a trading account. But now with the extension, we no longer have just a trading account, we have what is known as a trading profit or loss statement or simply a profit or loss statement. So I'll go back there and say we now have a profit or loss statement or statement of profit or loss. I'll just rub all that again. So we now have a statement of profit or loss, of profit or loss for the year ended 31st December 20X form. So basically, when you have a question like the one that we were asked to, the one that we have, we write here, what we're being asked to do is to prepare this statement. And so I'll go back to our page and say let's prepare our statement of profit or loss as we've been asked to do. Every time you're preparing a statement of profit or loss, or any of the major statements, you want to start it on a new page. So I'll go here and say new page, and then I'll go back to my question. Look at the company you are preparing the statements for, so put the name of the company on top. So I'll say 4th IR, and we are preparing a statement of profit or loss, okay, for the year ended 31st December. So I'll go back here and say statement of profit or loss for the year ended 31st December 2014. And then look at the currency we're working in. If you notice from the top here, we're given the amounts with thousands on top on both the credit and debit side. What this means is that this figure 148, you need to add 3 zeros towards the end. So this figure is actually 148 million. I'll rub that. This figure is actually 5.4 million. It's supposed to be like that. And this next figure is actually 3.7 million. And this is meant to help us make our calculations easy. So when we go to our financial statements, what we want to do as well is keep those figures the way they were that side, okay, and we'll know that we're working in thousands, and each figure that we put there will be in thousands. Then the next thing you want to do is just look out for the figures that you need. So we're supposed to start with our sales there, and our sales are this figure 252,000. So I'll say sales 252, so that's 252,500,000. The next thing you want to do is look for your sales returns. But what you're going to notice is, pause the video and look through the figures. You will not see any sales returns, so we don't necessarily need to take our sales returns into account here. So we jump to the next part of the profit and loss statement, which is we need to calculate the cost of sales. To calculate the cost of sales, we go directly into getting our opening stock or opening inventory, and our opening inventory will be in the trial balance. So at the beginning of the year, remember we are preparing financial statements for the year ended 31st December 20x4 or 2014, and the beginning of that year is January 2014. So the figure for opening inventory is 12,350 or 12,350,000. To that figure we need to add our purchases. So our purchases were a total of 148,800,000. So get your purchases of 148,800,000. I hope you have a calculator here. Calculate with me. How much would that total up to? So that will be 12,350. Add 148,800. If you go to 161,150, then we are together. So you just need to bring that there and say 161,150. Okay, and the next thing is we don't have any carriage inwards, any carriage returns and the like, so you can go straight into closing inventory. And in most questions this is what will be the case. You have opening inventory, you have purchases, and then you have closing inventory. So I'll say closing inventory or closing stock, and our closing inventory in this case was how much? Look at what we have here. This is outside the trial balance, so we have 16.3 million, meaning we need to drop those zeros for it to be representative when we take it there on the financial statement. So we'll say 16,300, and this will mean 16,300,000 because those zeros are supposed to come down there. So when you subtract that, so 150 minus 16,300, you should get 144,850. So 144,850. That happens to be our cost of goods sold. And you can even include a description here. Say cost of goods sold was 144,800. When you subtract your 252,500, you subtract 144,850 from 252,500, it should give you your net or your gross profit. Should give you a gross profit of 107,650. So as at there, we've prepared our trading account, but to make this a profit or loss statement, we need to then check for other income. So if you have other income there, check for it. I've quickly scanned through this and there's no other income, but you can pause, look at it and see if you have other income, but there's nothing. So we can just go to the next expenses. So the next expenses that we have as we keep going down there is there's advertising, there's telephone, there's salaries and wages, electricity, rent, and so on. So we will pick those up and just include them. So we say less expenses, and the first one we had there was advertising. The next one we had was telephone. Next one we had was salaries and wages. We also had electricity. We had rent. And when we continue downwards, we'll see that we had general expenses. So let me go back to the question and show you those. So we've taken account of sales, purchases. So now we've taken advertising of 5.4. We'll take it that side. Telephone of 3.7. We used inventory already. We have salaries and wages. We have electricity. We have rent. We have general expenses. The rest of these are not amounts that go into the statement of profit and loss. And just a reminder, we talked about income and expenses as we're doing introduction to accounting. Only income and expenses will go into profit and loss. Assets, liabilities, capital or equity generally are going to go into the statement of financial position. So when you look at land and buildings, it's an asset. Furniture is an asset. Motor vehicles are assets. Accounts receivables are assets. Cash is an asset. Accounts payable is a liability, and then capital is part of equity, and so those will not go into profit and loss. So just pause, look at these figures. I'm just going to carry them and take them to the profit and loss. I've memorized them, so I will pick them up and say advertising was 5.4, 5,400,000. Telephone was 3,700. Salaries and wages were 46,000 or 46 million. Electricity was 3 million, so we paid for electricity of 3 million. Hope Zesco doesn't load shed. Rent was 2 million, and then general expenses was 4,700,000. When we add all these up, add with me. So 5.4 or 5,400 plus 3,700 plus 46,000 plus 3,000 plus 2,000 plus 4,700 should give you how much? Let me just run through that again. So we have 5,400 plus 3,700 plus 46,000 plus 3,000 plus 2,000 plus 4,700 should give you 64,800. So we're going to get that total, those total expenses, say 64,800. When we subtract these, it should give us, when we subtract our profit, our gross profit here and our total expenses here, it should give us net profit of, so net profit of 107,650 minus 64,800, which is 42,850. Now I've closed it off, and I didn't even say net profit before tax because we didn't have any taxation here. But if you're told that there was tax, what you're going to do is, at this point you would have said net profit before tax, then you find the net profit, then you include your tax, subtract it, and then have your net profit afterwards there. But as at now, this is the answer to our question there. So that's our statement of profit or loss for the year ended 31st December 2014. In the next video, we are going to do the second part of the question, which is preparation of the statement of financial position. Thank you and bye.